Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets, unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage the risk. I'm your host, Jim Matthews, reporting from Chicago on what has been a cool and rainy little week here in Chicago because it is officially the second half of October. And joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley. Jake, how are we today?
Doing pretty good, Jim. Had the windows open pretty much all week, but I think we're going to cool off and start to catch some rain this weekend. So
just enough to close them back up. I hear you. We had a really nice run here in the northern Midwest, Jake. In the northern Midwest, as you Kansas folk might put it. The windows have been open a lot, but then the past few days, we've been creeping down to the 40s overnight. Did get some rain. Had to bring some of my jack-o'-lanterns back inside. You want those jack-o'-lanterns getting soaked too early in the month of October, right? You don't want them soggy out there. And then the squirrels, animals get all jumpy, right? They get excited. You know what I mean? You guys have jack-o'-lanterns?
Warm enough here. We haven't even carved ours yet. We're going to carve them up this weekend because we've been close to 80 degrees for quite a while. You don't want them to get all melted down either.
You know what? That's a great point. Okay. So you're going to have 1 week of jack-o'-lanterns.
Yep, we've had about a month and a half of pumpkins.
Well, we can't not ask for more than that, Jake. A month and a half of pumpkins, can't ask for more than that. Jake, I'd like to say we have a lot to run through. I feel like it's what we usually say. We're going to actually find out if we do have a lot to run through because, government's still closed, still not getting any reports, still wondering what's happening on the macro front with some of this trade news, but we will attempt to dive into all that in a moment. But first, Michael, if you would please kindly timestamp the broadcast because it is Wednesday afternoon and most of the grain and feed markets closed in the green today, albeit just slightly. We did have December corn up 3 1/4 at 423 today. So now flirting with that upper end of the range we've been in now for what has felt like weeks, if not months. We had Deep Wheat close back above $5, up 3 1/2 at 503 3/4 after trading below that threshold for a bit this morning. Novi beans up 4 cents, 1034 3/4. December meal, that stubborn little byproduct, continues to try and push its way higher, up 310 at 290 even. And the one market that did manage to close in the red, that was a decent pullback, and that was December oil was down 58 points, right at 50.07. The one grain and feed contract really in the red today. So something to keep an eye on, perhaps giving some strength to the protein markets here at the board. But Jake, just you and me today, buddy. I think people might just stop watching after the intro because, like we said, the government was closed again, right? We're on day 22, I believe, of government closure. The dialogue between folks in Congress and the White House make it sound like they would gladly perhaps go over the record of 35 days of shutdown in the first Trump administration. So we're trying to figure out some of the dialogue coming from the USDA. It feels like some elements of the USDA may start functioning again. We might even see some direct payments to farmers during this shutdown to the tune of $3 billion. We're still maybe hoping for some clarity on that one as well. Perhaps figuring out a trade deal with China. Perhaps our leaders of those two respective nations will be meeting at the end of this month. Perhaps we've been harvesting at a very healthy clip with some decent yields. A lot of perhapses out there, Jake. I guess, Jake, what have you been hearing, or at least wondering or thinking over the last week or so when it comes to our grain and feed markets?
Well, I've been wondering a lot of things, not getting too many answers. a handful of alleged statistics flying around out there. I think industry expectations at this point, and again, this is tough to verify, but the industry doesn't typically stray too far from where things are typically trending. And it sounds like the corn crop as of this past Sunday was just about 60% harvested, and the bean crop was coming up on 3/4. Of course, now we're 4 or 5 days from that, with a pretty good stretch of weather across most of the grain belt for them to continue harvesting. Would not be surprised to get into the end of this week and start of next, having at least 2/3, if not 70% of the corn crop out of the field, and getting into, the 80-something% harvested range on soybeans. So certainly making a quick move here towards the home stretch of harvest. I think basis in a lot of markets has felt the pressure of a big crop coming off fairly quickly. If you are waiting on a further break lower, and I know some of our rail dependent markets haven't quite seen the breakdown that you see in the Midwest, but are holding out, I think you're down to a handful of days before that clock runs out now. And a lot of combines get back in the sheds, the lines at the Midwest elevators kind of thin out, and the pressure from harvest starts to wane a little bit. So there's been some opportunities for some folks. There may still be an opportunity or two for others. I think once harvest is kind of wrapped up, typically basis starts to steady and eventually creep higher. And so by then, it's probably wise, if you get a good opportunity to own some futures at the bottom end of the range, go ahead and buy your October Dees corn. And then the next opportunity, see some sort of downside pressure comes usually after the first of the year. You see the Midwest farmers start to push some grain out of the bins, get a little cash flow going on their farm. You've extracted a little bit of the carry from the market, and the commercial elevators have captured that, and they're ready to start shipping some stuff down the rail lines and down the river. So sometime in January, you may get your first look at an opportunity to buy some of that Jan, Feb, March, or even January through September needs on the corn front. So that's kind of where our head's at on that sort of thing. Protein has been a little bit of a different deal because both basis and futures have been very attractive for quite some time. I think most folks own through March already and on their cash needs, and they have basis probably booked up through September in a lot of instances. Some folks are waiting on that April to September futures curve to kind of take a little bit of the carry out of that market. But this thing continues to bottom out with nearby futures down at 275, 280 type of range. And we did it again this week. I think chatter around China and Canada trying to figure out some sort of trade resolution and getting canola flowing back out of the PNW, and potential for trade discussions between China and the US, and soybeans being a priority of those discussions. Those two headlines, whether they do come to fruition or not, seem to have bolstered the soy complex here in the last week or so. I think we're now $15, maybe $20 a ton off the bottom in just 5 or 6 trading days. So that 280 mark continues to be a good area of support and a nice place to be buying feed.
Yeah, and I think, Jake, from the protein standpoint, the 280 number you keep referencing, I mean, I think you can go back to a year ago more when we have, on this show and on calls with our folks that we speak with, that 280 per ton is kind of a long-term support level dating back. We're talking for December delivery. I mean, we're dating back 10 years or so, right? Pretty consistently providing some support. Can it be broken? Yes. Will we trade under it? Yes, at times we will. Do we trade under it for prolonged periods of time? Usually no, right? I think the most we can get is a couple weeks out of that. And for the most part, the end user ultimately steps in and finds some pretty significant value at those 280 futures. Now, we did spend some time in the 270s for a bit here, at least over the past few weeks, if not more. But ultimately, some strength has prevailed. We're not running away with this thing. We're at 290. So we've still yet to even push back up to 300. I'm not saying we cannot, but I think to your point, Jake, part of this is the premium we've seen built into the soybean market and people just wondering if we can make something happen with China and it has to do with soybeans. What's it going to be like? How many beans is it going to be for? Is this going to be the first Trump term trade type of deal? Or is this just going to be more of a, hey, let's all be friends again for a bit. We'll buy a month's worth of your beans. You'll lower tariffs on this. We'll lower on that. And let's kind of calm things down a bit. I think either way, one could argue that what the Chinese have done since the first Trump term is made themselves plenty diversified in terms of where they buy their agricultural products. South America is the big dog when it comes to being that export market share for those guys. And I think, Jake, we've seen some really interesting news, from Argentina. First, it was a few weeks back in terms of the U.S. credit facility, and they had lowered their export tax temporarily. And boy, howdy, did they sell beans and meal to China during that very brief window. I believe we determined it was $7 billion worth of agricultural goods during that 3 or 4 day stretch in which the Argentine farmer was able to offload their beans. The Argentine crusher able to offload its byproducts, and the Chinese, gladly accepted those. And unfortunately, during a period where usually this is our time, this is our export window, we are harvesting, we are selling and shipping beans. So some really interesting headlines in terms of this matrix of, the United States and Argentina, and maybe talking about some deals of Argentine beef. Of course, they have their neighbors, the Brazilians, where we used to buy pretty decent chunks of Brazilian beef. And we saw the President of the United States today make some comments over some of those tariffs, and then the beef markets pulled back. And Jake, I don't want to start diving into waters that I shouldn't be swimming in and even begin to discussing the cattle markets, but it's all related and it's all impacting everything that we ultimately buy and procure for our animals here in the United States. So, Jake, if we just stick to the corn side for a moment, you talked about the range we've been in, really not running as aggressively higher as we've seen in beans, as we've seen in meal. We continue to hit the upper end of this thing. I would even argue nearby kind of carrying this a bit more than we are seeing in maybe March and some of the deferred contracts. But as we look at this, Jake, you did ultimately, I think, do an amazing job of ensuring that most folks that you're speaking to did buy a significant chunk, if not most, of their Ocno Dis. I'd say at the lower end of this range, if not lower. So what do you think folks should be doing, I guess, for Jan forward when we're looking at March futures, May, some of the carries there, and what you're thinking basis-wise? What should we be thinking about for that time frame as we enter calendar year 2026?
Yeah, I think you've got a big crop. We've got some room to reduce both yield and demand on the balance sheets if and when we get WASDE reports flowing again. But this thing's very, very range bound. And even before the shutdown, it was pretty range bound. It's just narrowed up since then. But anything down around 410-ish type of December futures is a place to be buying that stuff. And it feels like if you're not going to own the January forward stretch of this thing, if it can dip down around 4.25 or 430, there's some pretty inexpensive ways to put a ceiling on that stuff using some sort of call strategy. Just in case things get real funky and this thing does start to run higher. I don't think we're terribly worried about some sort of blowout run higher on futures at this point, but we had a record size crop last year and we still went back and revisited $5 futures at one point or very close to it. So Down here towards the low end of the multi-year range, it feels like a place that if you're not going to own, I mean, we're talking you can do for a handful of cents per bushel, you can get some very aggressive topside coverage on corn. That seems like a reasonable thing to be doing, especially in the environment that we're in where milk markets are not doing those producers too many favors. The beef market feels like it's at the very least volatile. So if you can manage your inputs here, I think it's a responsible step in the right direction.
Good deal, Jake. I think that is excellent advice because, hey, before we know it, I mean, it's almost Halloween. I mean, you're going to have some jack-o'-lanterns here pretty soon. So we know we're getting close to Halloween, which also means then, I hate to even talk about it, right? But we're going to be pretty darn close to Thanksgiving then. And then we're going to be pretty darn close to December futures rolling off the board, and looking at December 26 futures will be our December contract. So that'll happen before we know it. And as you noted, earlier in 2025, we did see the December 25 contract at that time ultimately did run up into that like 480-ish range. Mostly had to do with a lot of macro news, right? We saw the new administration come in. We initiated some trade battles with our immediate neighbors, Mexico and Canada, and that started to see a pretty sizable run in the market there for a bit. So we know that regardless of the fundamentals of this thing in terms of what we've produced in the U.S., even though we're flying blind a little bit from no USDA reports, we know we've got a healthy harvest pace, most likely have a pretty healthy harvest itself, right, in terms of yield and total production with strong acreage. So we know the corn is there, but it's still always best to take some action to be cautious and manage some risk as we move into the rest of the fall here. So, Jake, with that being said, despite flying blind, excellent discussion today. Be safe. Carving those jack-o'-lanterns. Might have some casualties. Just got to be careful.
10 this reach. 10 this reach.
But good work today, Jake. Thanks for being here. We'd also like to thank the Everag Insights crew for their support. A big thanks to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.